So DraftKings launched 2012. Like, they largely just copied us. I think they had a product early on that was innovative, but it didn't work. And so their V2 was basically FanDuel.
This podcast is sponsored by Pragmatic Solutions, the player account management platform chosen by today's smart betting and gaming operators. Don't let technical constraints delay you from achieving your business goals. Expand your business, boost your margins, and dominate the market in any leading regulated jurisdiction with our powerful, flexible, and secure iGaming platform. Enjoy its extensive marketing tools, compliance protection, real-time data, and a wide portfolio of over 1,000 industry providers. It's time to upgrade your technology. Let Pragmatic Solutions show you the modern approach. Visit pragmatic.solutions and join the smart thinkers.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Bingo, bango, bongo. Nigel Eccles, co-founder of FanDuel, here today on the podcast. Nigel, how are you doing today?
I'm great, thank you.
Brilliant. And just as an introduction here, Nigel, of course, I read a book recently called Dueling with Kings because I was particularly interested in the history of daily fantasy sports. Yeah. And this book kind of outlines the incredible journey that yourself have been on, founding FanDuel and then building it to what it became, and the story and the aftermath and so on and so forth. And I just found it to be an absolutely incredible story of entrepreneurship, finding that initial opportunity, grabbing the bull by its horn, and kind of navigating this incredibly difficult space that it turned out to be eventually. So I'm really honored and grateful to have you as a pioneer here on the podcast today to talk about this story, of course. And I want to just go back to the start then, basically. Can you talk about the founding story of FanDuel? How did you discover the opportunity that became daily fantasy sports?
Sure. So it sort of goes back, like my background, just very briefly, I studied pure mathematics, probability at university. The first startup I joined was in 2000, was a company called Flutter.com, which was a person-to-person betting site. It merged with Betfair in 2001. This is in London. And then in 2007, and I'd wanted to do my own startup ever since then. I just loved the experience of being in a startup, and I loved the gaming sector. And in 2007, we came up with an idea of creating a prediction market. And this is long before Polymarket. This is even before crypto. Right? Like, this is before Bitcoin. We had this idea of a prediction market, and it essentially is Polymarket. It was essentially Polymarket. The only issue we had is we had no real means to do payment. And so we did it as play money. And then we sort of explored, let's do it as play money and see how we could go premium. We launched that, it started 2008, and it did incredibly well. That was 2008 election. It was Obama's first election. So it was tons of interest, and it really took off. And then what happened was post-election, exactly the same what's happened with Polymarket, is just interest just sort of died off, right? Prediction markets, brilliant for elections. The other categories just aren't, there's no just like other, outside of sports, the other categories just aren't really as compelling. And so we were like, we're kind of stuck. We can't just wait 4 years, right? So we're going to have to do something else. And we looked at it and we were like, well, our biggest category, even though we hadn't focused on it, was sports. We saw that fantasy sports at the time in the US was played by about 25 or 27 million people. But we thought the games are kind of crappy, right? It was like the games took like 5 or 6 months, or depending on the sport, like whether it's baseball or football. They would take maybe 4 to 5 months. They they were really hard to onboard. Like you couldn't just turn up in an app and just download it and play. You had to like be invited by like 9 other people. You had to join at the draft at exactly the same time. Now those are things that make the game fun, but they're kind of a real barrier to playing. And the prizes were tiny, right? Like so you got like you put in $10 at the end of the season, you win, $120 or something, right? And so we were like, the other one was you couldn't play on your phone, right? You could only play on desktop. And we were like, and this is 2000, by this stage it's 2012, I guess, 2009. And we were like, I think we could make this better. Like, what if we took this product that 25 million people play, so it's popular, and we make it faster, we make it easier to understand and play, and we put real prizes behind it. And that was basically the genesis of FanDuel. We launched it in the summer of 2009. Didn't really work. No one. Like a funny story is one of my co-founders, head of marketing, and she just was like, "This is just not working." And I was like, "Hey, look, I've done this model, and the model is that we just need to acquire 2 new users a day, 2 new users, 2 new users, and if we can do that, then we can make it." That was I don't know how I figured that out, but let me tell you, and if we hit 2 users, it's a good day, and we can celebrate, right? Most days were not good days. It was like all I remember that period was most days were not good days. And then we kept changing, we kept improving it. And we made a pretty big change to the product at the start of football season. And then football season started as NFL. And then the product really started working from that point forwards. But so the point from launch, which was around June, July, until the product really getting traction in November. It's quite short, actually, in retrospect. Like, I would take that, like that 4-month period finding product market fit. And then, then it really kind of, like, it wasn't easy, but that was the sort of the initial period of launching it and getting initial traction.
Right. And so it was the innovation here, right, was that instead of, as you point out, these longer fantasy sports seasons that were one bet and it settled 5 months later, you wanted to speed this product up essentially, and that
faster,
became the daily fantasy sports.
Like, faster, bigger prizes do on your phone. Like it, in retrospect, you're like, well, yeah, that's obvious that would work, right? But at the time,
something new.
Yeah, it was very new. Like a lot of people were like, no, people want to play season long just with their friends. This is niche. So many investors told us it was niche. Like I lost count of the number of investors. Like investors love to talk about the TAM. The TAM is small. Like, because they would say, how big is the TAM? And TAM, total addressable market. And they would say the TAM is how many people are playing this game. Right. We are the first. So the TAM is us. If that's what you find the TAM, then you're never going to invest in this company. But what we realized was that our users, the TAM was not that. The TAM was anybody playing season long would also be interested in this product as well. And so our big percentage of them. So the TAM was a lot bigger. But, in those early days, that was not the case. Most people thought this was a very small niche product that wouldn't get to any scale.
Yeah, and later on, of course, this became a war of who could raise the most capital and spend into marketing, right? But in the early days, as you point out, it must have been really difficult to convince investors that this was worth investing in.
Yeah, this was not early on. Like everyone thought this was niche. The other big issue was sort of legality. They were like, well, how is this legal? And we would have our lawyer's opinion, and we could point to Lawful Internet Gaming Enforcement Act that defined fantasy sports. But at the time, there was just, particularly in the US, there was just so much concern about online gambling. And the thing about US laws is they're overlapping, they're sometimes conflicting. They're always open to interpretation. And so one of the things you never want to say to a US lawyer is, what is the worst that can happen? Right? Because the way the US laws are written is the worst can happen is always really bad. It's always really bad, really, really bad. And so, you would talk to some investors and they would really like it. And then they would go to their lawyers and then they would say to their lawyers, what's the worst that could happen? And then you'd never, ever hear from that potential investor again. So that was a real issue early on. And lots of investors wouldn't invest in us for it was funny. Some of them wouldn't invest us early on because they thought it was for legal. They were like, well, we're not really quite sure about the legality. Who subsequently invested when we were bigger, even though the laws hadn't changed, right? Like they were like, when it was getting bigger, they're like, well, it's bigger now, so therefore it's somehow it's more investable. But in those early stages, incredibly hard to raise money.
Yeah, and I mean the backdrop at that time, as you point out, of course, is that you had a period of exponential growth, especially in the poker boom in the US, where everyone was playing poker. WSOP was the place to be, and then when UEFA happened in the mid 2000s, then all of a sudden this poker boom just disappeared overnight almost. And so you had a lot of operators that were taken to court. We did a podcast recently with David Carruthers, who was running running one of the biggest online gambling operators at the time, who got prison time.
That's right.
And so here comes Nigel Eccles and FanDuel and says that we're gonna reinvent, let's say, online gambling without it being gambling here, because certain loopholes and so on. And of course, investors would be very scared. That
absolutely. Yeah, people had sort of gone to jail for breaking U.S. Gambling laws, so. It was definitely a concern. So we launched in 2009. Every year thereafter, from 2009 to 2015, we grew between 3 and 5x every year. So, and so like you'd see us, like revenues went something like 1 million, 5 million, 15 million, 70 million, 150 million. That's just a crazy sort of growth curve.
Yeah, incredible. Was there a watershed moment at some point, Nigel, where you just realized in the beginning is this product gonna actually take off? Was there a moment where you're like, this is it?
I've been asked that a lot of times, and I think it's a little like fish don't know they swim in water. Like it's hard when you're in it, particularly I think when it's your first startup, to go. Like you can look back in retrospect and go, oh yeah, that was a pretty key moment. And I can see those now, but I'm not sure I honestly can say at the time that was like, now we're cooking. Because we did we got product market fit quite quickly. We started growing, but it was really hard to raise money. And then we moved it still was really hard to raise money, but then we started getting a lot of competition. Even before DraftKings launched, it was competitive. Like we had competitors. Draft Street launched at a similar time as us, and they were like a tough competitor. Then DraftKings launched, and they were obviously very tough competitors. So, I don't think there was maybe a moment by 2015, maybe 2015, we were like, I don't know, we were like, not a zero was like a point, like was there even a man? Like, I don't think we ever really felt comfortable that entire time that, this was, like we were always hungry, that we needed to grow faster. We were always concerned. The other thing you got to remember is that, look what happened to the poker companies, they overnight, they wake up and boom, gone.
It's over.
So, I think it's, in this sector, it would be dangerous to say, now we've made it or X. I think all the way through that period, we were always, very, we were like, look, this growth's great, but we need to be growing faster, and we, there's, it's unpredictable.
Yeah, and the kind of where you lean back legally in the start, as far as I understand it, when UEFA was introduced, this bill to basically shut down the online gambling industry, it had a provision in that bill that excluded fantasy sports. Is that correct?
Yes.
And was that the kind of basis for how you entered?
Somewhat. Again, as I said, like US laws are overlapping and sometimes contradictory. So the way it actually works in the US is that most gambling legislation is at a state level, and most states allow games of skill. That's why you can have, like, say, a golf tournament. Like, the golf club doesn't have to have a gambling license in order for people to turn up, pay an entry fee, and win a prize. In fantasy sports, in nearly every state, was also considered similar to a golf tournament. So it was a game of skill. And the distinction that most states used was that like a bona fide contest of skill. There's kind of one of the sort of legal definition, and they'd say, well, is skill the predominant factor? So there could still be chance, like in golf, there's weather, there's, all sort of factors that might be in it, but, that's fine as long as skill is the most important factor. So those are sort of the statewide. What UEGA then did is at a federal level, it just sort of, for the first time, defined fantasy sports. Because before then, there was no legislation about fantasy sports. And then it just sort of said, hey, there's this thing that's really big and is really popular. And this legislation, just to be clear, this legislation is not about fantasy sports because fantasy sports is illegal. And so that was kind of the connotation. And so it just gave it a little bit more kind of robustness at a federal level. And then we operated. And then that definition did not say that the contest had to last 4 or 5 months. It didn't say it had to have 10 players. It didn't say, it just basically was a fairly simple definition of accumulation of points over multiple sporting events. So we're like, great, okay, we'll operate within that.
Yeah, there we go. And then, of course, this would be the battle that would happen in the mid-2010s, then whether daily fantasy sports was considered a skill game or a game of luck. Basically,
that's correct. Yeah, and so we had, and so that, all these sort of arguments about it was a game of skill. Like, it's a game of skill. Like we had data to show it, and I always challenge people. I'm like, go and put a random lineup in and see how you do. Right? Like you will not win. We could show that people of high skill win consistently, and it's funny, we got beaten up for that because we were like, these sharks are like, taking the money from these players. And we're like, it's a skill game. Like what you're telling me is, if you went in and played, you went into chess.com and were betting $100 on yourself and you suck at it, that Magnus Carlsen and all his buddies were like taking their money off you and how this was unfair. And I'm like, it's a skill game. So we used to get beaten up by people saying it was gambling, and then by the same people saying that, and also these highly skilled players are taking all the money. And so, which is kind of amusing if it wasn't kind of really kind of terrifying, because, a lot of the time these were like legislators and attorney generals and stuff like that.
Yeah, of course. And but I think that was the point also that kind of led to passing the peak of daily fantasy sports at some point, right? That in the beginning, players felt like, this is exciting, and they maybe did feel that thrill of gambling to some extent, that they had a chance of winning. Yeah. But then it turns out that it's actually just like the top 1% or something like that of players that were actually making money, right?
I think, you have to sort of compare it relative to other skill games. Chess, game of pure skill. If you're up against Magnus Carlsen, you're not going to win, right? Like, it just like, so a game of pure skill. Then you sort of come down the scale, and then the other end of the scale is like game of pure chance. And there, but
paper.
Rough. Oh no, there's a bit of skill in that one, depending on
psychology. Some psychology.
But like, there's it's something like poker, and poker had this experience as well, which is a lot of people came in, a lot of people thought like they thought they could win with no effort. And so you had this boom, and then a lot of those people lost. I think we did a little bit of that at DFS. I do still think that there was more that we could do. Like we had like beginner leagues, we had lower player leagues. We restricted the sharks from like playing in those, low player leagues. But I still run into people today that have played it for like 10 years. It's, do people have unreasonable expectations that they're going to win? Like, I don't know, like everyone does. I do. Like, I have unreasonable expectations that I'm going to win when I go to the casino, right? Of
course.
But no, I know the boss. So we had very, very fast growth through 2015. The slowdown 2016 onwards really was down to probably a few factors. I think one factor was the companies took massive sort of reputational hit because of all of the legal issues we were running into. So that was a huge factor. Secondly, we both us and DraftKings massively dialed back the amount of ad spend we were doing because we were, we were dealing with all those legal and regulatory issues. But if the player base that were on the site, we held on to that player base and I think grew through those years. And then the other thing that sort of since 2018 that has sort of affected the industry is that FanDuel and DraftKings very rightly have focused on sports betting and casino. So they basically said, oh yeah, that DFS is great. It's a great acquisition tool to sell them into a more profitable product. So sportsbook user is probably worth 10x a DFS a customer. So, so if you have both these products and you've got 1 million of these people playing DFS, well, you're just going to hammer them to go and play sportsbook. And so I think DFS hasn't really seen much investment since 2018. And that, economically, that was the right decision. But what the impact of that being is I don't think DFS has seen much growth since 2018.
Oh, brilliant. And I want to go back to kind of the early days as well, where you start to realize that this is going to be a game of liquidity. The winner in this space is going to be the company that spends the most marketing dollars. And all of a sudden, this massive ramp up in marketing where basically DraftKings and FanDuel become some of the biggest advertisers in the United States overnight, more or less, right? So can you talk about kind of how that war started, let's say, against DraftKings? And I'm interested to hear kind of the insider story from your perspective, how you perceived DraftKings during that time and what you guys were doing to find an edge,
Yeah, so DraftKings launched 2012. Like, they largely just copied us. I think they had a product early on that was innovative, but it didn't work. And so their V2 was basically FanDuel. And so they were, like, obviously at this point a distant number 2, and their strategy was reasonably simple, but actually quite effective, which is they were going to copy us, they were just going to copy our product, and they were like, okay, that's working. They were going to outspend us on acquisition. So they were going to raise a lot more money, and they were going to run their product at a loss. So they were going to basically run tournaments where, you could have $1 million in prizes, but they would only take in 800,000 in entry fees. And what does that mean? Well, it means that if you're a whale, if you're a big player on FanDuel, you'd be crazy not to go and play in DraftKings, because DraftKings is over there selling dollar bills for 80 cents, right? Like, that's a good deal. And so that approach was very, very effective. Now, the one thing about that approach is it takes tons and tons of money in order to fund it. And that was kind of the key part of DraftKings, which is they were just going to go out and keep raising more and more money. And so from 2014 onwards, they just were endlessly trying to raise more and more capital to try and win the market and to try and be number one. At FanDuel, like, we saw that as just being very, very destructive. And it put us in a very difficult position because, if you think about on the ad spend side, like, we had deals that were like, okay, here's a deal. You go and analyze it. Yep, that's sort of net positive, but maybe kind of break even. Let's renew it. DraftKings would come in and say, we're going to offer 3 times, 5 times the amount, right? And so you're like, okay, that's just totally uneconomic. But so you'd give up on that deal, but there's a limit. You can't give up on all of the deals, right? Because you can't compete. And so we just said, look, we're not going to try and outraise them, right? Because that is insanity, because it's hugely value destructive. But we're going to go toe to toe. We're going to preserve our number one status, and we're going to be disciplined. We're going to be like, because some deals we're just going to like give up on, and there's other ones that we're going to maintain, and we're going to be super quantitative, super focused on every dollar that we spend is highly performant, and that we're tracking it. And that was one of the great things, and one of the things I'm really proud about at FanDuel was, like, we sort of by the end of like 2015, 2016, I think we were about neck and neck, same size of company, but we'd spent half of what they had spent. We'd raised half of what they had spent. We also, as a company, were dramatically more disciplined. And what that meant was, to this day, that's still true today. Like FanDuel and DraftKings spend about the same amount of money, but FanDuel is significantly bigger. So there's something in the DNA that I think through that period that we created, which was, we're going to be number one, but we're going to be disciplined. It's not about just raising more money. Whereas DraftKings, and I don't the credit to them, right? They were second, they started later, they were going to go all out to be number one. But what that did is, I think it created a culture there, which is it's all about raising money and spending it. And so it's very, very sort of different cultures of companies.
Yeah, it's interesting to hear. And I mean, what were the discussions like internally when DraftKings propped up and started outspending FanDuel in left, right, and center to try to win these advertisement deals and to clearly create this war of attrition where one of you are going to die and one of you are going to survive?
Yeah.
What were the actual talks like? Was there like an anger towards DraftKings?
Oh, yeah, it definitely, like, we felt that they were on a mission to they ran the risk of completely destroying the industry. That they were it was a level of competitive to a level of irrationality, which is like, you're rolling the dice that, maybe you've got a chance of winning, but you're actually just going to nuke the industry. So that was, so we weren't super happy about that, shall we say.
And was there communication between DraftKings and FanDuel at some point during this to kind of slow down, or to
that's, you can't collude, like you can't say hey, let's not do this, or like even if we did say like let's not do this, they'd still go and do it.
The market was what it was at that point. So of course
we were quite public about I'm sort of, they really pushed the envelope on some of the legal stuff, and we were like, oh, I don't think that's a good idea. And then they were like, we don't care.
So this all culminates, let's say, then into the year 2015, I believe, which was like the peak of
yes,
fantasy sports, with like the biggest prizes, the biggest tournaments, and all of that. Was there a sense also that you were kind of at the peak of DFS at that point, and it was going to change?
I definitely felt it got really big at that point. Like, we were mentioned in the presidential debate. We were like, we just got endless coverage, and well, I don't know. We felt like the peak at the time. It was like, how does it get bigger from this? This just seems like and I think, one of the funny things is, when people talk about the level of coverage, then the level of advertising, it's a fraction of the level of advertising today. But I think because it had sort of, come from nowhere to like suddenly overnight being really big, that was, suddenly everyone was like, oh my God, this is huge. Like, it sort of come from nowhere. So like, it definitely, in 2015, it felt like an explosion, that sort of drove the industry. But if you think about it, like the industry in 2015, I'm trying to think I don't have the exact numbers, but like the industry was spending, I think that year spent something like 700, 800 million in marketing. And between us and DraftKings, we maybe only did 350 million in revenue. So that was kind of the level of irrationality. Like, what percentage of revenue do you spend on marketing? Oh, 200%. Right? Like that was kind of like, now
unreasonable.
But it worked because they now, those companies now dominate sports betting, because it built this massive brand. But like at the time, it's kind of terrifying.
Yeah. And so then, 2016 comes, and all of a sudden you start dealing with these legal challenges. And I believe many states were challenging this notion that there was a game of skill. But then particularly the big legal battle played out in New York, right?
That was New York was the key state. Yeah.
Yeah, talk about how that was. Again, as a founder, you had this great idea. We're gonna launch daily fantasy sports in 2009. Everything's gonna be great, and then you just find yourself in this like insane war of attrition against DraftKings. Now, all of a sudden, you go up against these like massive legal battles, whether this is actually legal or not. It must have been incredibly mentally tough to go through this year, feeling like the knife is against the throat every single day for many, many years.
That was a tough period. So the backstory of what happened, 2015 football season, massive ramp up in ad spend. Can't remember what it's week 4, week 5 of that season. An employee of DraftKings made a mistake. He published some information. The information is percentage held. So you would say, hey, for this weekend's, Tom Brady was X percentage held or like bought. And that was fine. That was his job. He would publish this information. The mistake he made was he actually accidentally shared the percentage held of the later games that hadn't started yet. It's kind of like at the margin, it could be useful information. Not massively. If you're a good player, you kind of knew those numbers anyhow, but it was kind of like a mistake. Not a big deal. Would have there would be nothing would have ever happened had subsequent events not happened. But that created a little bit of a kerfuffle in the forums. But it was just a mistake. That same weekend, that employee came second in one of our tournaments and won, I think it was 250,000. His name is Ethan Haskell. I'm not doxing him because his name became headline news for about 3 months. Nice guy, actually. But yeah, so then everyone connected and said, well, he had this inside information and he won on FanDuel, right? And so basically the accusation became is that he was using inside information in order to win on FanDuel. Now, a few things. One, he'd put his lineup into FanDuel long before. And then it sort of went from there to like the insinuations was that these insiders were trading against the general user base, and that they were, we were fraudulently taking money from the users and all DraftKings employees. Now, our employees never played on our site, their employees never played on their site, but we did let them play on competitor sites. Like in the gaming industry, you want your employees to be able to like play on your competitors' products to kind of understand them. And now, one of the funny things, and we never shared this, I always wish we had shared this at the time, was that DraftKings employees did play on FanDuel. They were net losers. So they were not, like, despite this narrative that the media had created was that they were taking all this money, they were really bad at it. And I'm pretty certain that our employees that played on DraftKings were similarly bad, right? But I thought it was quite funny. But anyway, it wasn't funny at the time. This became headline, like literally headline. We were front page of the New York Times. We were all over ESPN, like everywhere. And it went from the simple, employee makes a mistake and also happens. He was actually, I think he would have been the exception because he was actually a very good player, right? Also won to this insinuation that this was all fraud. We then saw an avalanche of negative press and attorney general action. So these are at the state level. Texas, Illinois, there was at least 11, of which New York was the biggest. And they were basically cease and desist, get out of the state, right? And so, yeah, that was really challenging. And with some of the smaller states, we just said, you know what, we're getting out. With the bigger states, we actually were like, no, we're in the right and we're willing to go to court. And the biggest one, the most important one was New York. In New York, we actually sued the attorney general to say, no, you can't stop us until it's called what did we sought an injunction against his ability to stop us, and a stay, and we got that so that we could operate up until the time we got to court. And that's where we were in New York. What subsequently happened was we did a deal with him, which was we will voluntarily leave with New York if you support us getting legislation through. And that's what happened. We actually got legislation through in the summer of 2016, and then we switched it on again.
Right. So you left. You ended up leaving New York for a couple of months, but
for about maybe 6 months. Yeah.
And then later on, it was clarified in New York that daily fantasy sports is in fact a skill game.
Yes, many years afterwards. Yeah.
Yeah, but it does come with this caveat of now being regulated and
well, actually, it is funny because it did that. It did. There was a group sued over the new law saying that fantasy sports wasn't a game of skill. It went all the way up to the Court of Appeals, and it found in the company's favor. But that must have been maybe 2022 or something, many years later.
Oh, was that recently? Yeah.
Oh yeah, very recently.
Yeah, interesting. Okay, so now the landscape have changed. You are facing these state-by-state battles rather than operating on a federal level. You get kind of pulled into this regulatory hornet's nest, let's say, and that's of course very distracting for the company. We're passing the peak of daily fantasy sports, and both DraftKings and FanDuel is now kind of pulling back on ad spend a bit. And then there is a point where DraftKings and FanDuel almost merged. Right?
Yes.
So my first question to you is, who called the who?
Well, we'd had discussions from before even the crisis, like December 2014. We'd had discussions then. It never really got that far. I never was that keen to do it, to be honest. I felt, and I still feel, that FanDuel had just a better culture, and I think that over the long term, so even if it wasn't, I just maybe that's every founder kind of thinks that, but that was kind of my view, and I was like, I felt that we wanted to build something that we had a disciplined approach to costs. We were building something that long-term sustainable, and I was very nervous about how DraftKings strategy, and if we merged, it was unclear what we were going to end up with, and so that was early on. So discussions never really went anywhere, and then in 2016, both companies were challenged, right? We weren't growing like we had been growing. The capital markets were a disaster because hey, who wants to invest in a company that's getting sued by half of the states in America? Our growth had slowed down dramatically. And so merging would unlock that, so we would, we would have a lot of cost savings of merging two companies, and then we would, and we would be able to raise money. So it was kind of natural at that point. And I think also for both companies, the sort of crisis was a little bit more humbling. They were actually, you know what, maybe we're not so different. The merger would have made sense.
Yeah. So the discussion goes on then with DraftKings, and you essentially get to a point where you do agree. But what was the terms that you agreed on at the end?
Yeah, it was a 50-50 merger. It was a 50-50 merger. I was going to step up to chairman. Jason was be the CEO. That was pretty much, and then millions of.
It was a pretty straightforward negotiation, would you say, at that time?
No, I don't think these ever are, because we've got a lot of the details were never really beyond who's the CEO, who's the chairman, who's the CEO, what's the economics. Even those are involve a lot, but then which brand were we going to have, which platform, those ultimately never ended up being decided because the merger got canceled. But no, they were being negotiated. But but yeah, those never went into play.
Yeah, so essentially what halted that merger was a regulatory issue, right? From a
So the
competitive point of view, that you were going to own the entire market, basically.
Yeah, we just, kind of funny that the government, which we sort of felt only before said that this was all illegal, was now saying it was important that, we preserve choice. So yeah, the FTC blocked it. We obviously dominated the market. The difference, like our argument was, well, the market's much bigger than daily fantasy sports. Daily fantasy sports didn't even really exist a few years ago. And so it's weird to suddenly say that this restricts people's choice. And we had lots of analysis to say that was the case. They disagreed. They sued to block it, and then we give up on the merger.
Yeah, and now you enter a new landscape then, basically, as you point out, where you can't raise yourself out of this incredible marketing spend. You're still in an environment where you still have to spend and so on and so forth. And so what was the thinking at the time now coming out of those merger talks? Like, oh my God, now we still have to continue to operate here. Like, what was the strategy going to be?
So the thinking was certainly, so by this point, PASPA had already been picked up by the Supreme Court. So I had always thought that PASPA was unconstitutional. I had always thought that this law, I cannot think, and I've never seen another law in the US that says that one state can do one thing, but another cannot. So PASPA just, I'm sure you're familiar, but what it said was that Nevada can offer sports betting, but New Jersey cannot. And no other federal law that I know of has got this, like, you're special, you get to have this and you're not. And New Jersey was challenging this, and I always thought quite rightly. So we knew it was coming down the pipe. We knew that sports betting would be incredible for the businesses because, DFS was a good business, but it wasn't a great business, whereas sports betting can be a great business. And so we knew that was coming, and then, sometime in 2018, for us as FanDuel, like we had a big business, like doing something like 130 million in revenue. Growth had slowed off. We felt that we needed a partner in order to properly capture sports betting if it happened. And so really, as soon as the merger fell apart, we were like, okay, we need to be working with somebody else. We've got a great platform, a great brand, a really great team. We have this incredible opportunity likely coming down the pipe, but we need somebody else who's capitalized and ideally got expertise that we can leverage in order to catch that opportunity.
Right, and so that eventually became Flutter.
And that became the merger with Flutter.
Yeah. How did those discussions start with Flutter?
And one thing to note is I actually left the company at the end of 20. So really at the start of that process of look, we're going to go into and it sort of looked at that point that we were going to be, going to have a partner. We might have been sold. Some of these things weren't really as attractive to me. And I also, in a lot of ways, I sort of started to think I was leaving at the point when I was going to become chairman. So I actually left at the end of 2017 to become a founder again. But certainly, when I was there, and we were kind of kicking it off again, they always start the same way, which is, you appoint an investment banker, then the investment banker, and then you start talking to all the parties. It's quite funny. All of the parties we talk to, if you think of everyone in sports media today, that you look at ESPN, who's an also ran, they would have had the opportunity to buy FanDuel for a very low price, right? But none of them saw the opportunity. But so we started that process. We started talking to all the parties. Paddy Power Betfair, as they were at the time, had already got a presence in the US because they bought TVG, which is the horse racing business, back in, it was early, 2012, maybe something even earlier, maybe even 2007. It was super early they bought it. They also bought Draft, which was Jeremy Levine's company in New Jersey, only a couple of years before. So they had always sort of had an eye on the US and saying, like, there's an opportunity here. And so they were the one that leaned in the most and were like, look, let's try and figure out a deal. Whereas other players, I think were slower. A lot of people were like, let's wait and see. Let's see what happens with PASPA. Betfair, Paddy Power were like, let's get in early, right? And so if it happens, we're incredibly well positioned.
Yeah. And so, now you've founded FanDuel, you ran it as a CEO for 7 years, something like this. And obviously massive exponential growth. You've been raising so much capital along the way to fuel this bigger and bigger machine. And it comes down to the exits then that happens to FanDuel, to Flutter in 2017, a couple of months after the repeal of PASPA. As you point out, you had left the company at that time.
Yeah.
And this is still an ongoing legal battle, right? But what happened then in the exit at the same time is that a lot of the original founders and employees and so on got disappointed there, right? Can you talk about
let me talk you
what
through
happened there?
The actual timeline. So, company started in 2007. We raised about 450 million over the period from 2007 to 2017. The company, I left at the end of 2017. The company in 2018 merged with Betfair Paddy Power's US division. It was a 60-40 merger where the FanDuel shareholders got 40% and Betfair Paddy Power, Flutter Entertainment got 60%. And then 2 years later, was it 2 years? Or was it? Yeah, 2020. So that was a merger. It wasn't an exit. The exit really happened in 2020 when the former FanDuel shareholders sold their 40% back to Flutter. So, and they sold that 40% for 4.2 billion. And so now Flutter owns nearly all of FanDuel. There's another small shareholder. But the FanDuel shareholders are all exited now. So that's kind of the storyline. We started in 2007. We raised about 450 million. We merged, and then 2 years later, we exited. So should be a good story. However, the way, and this is standard for 99% of startups, is that when you raise capital, the capital comes in as a preference share. And the preference share is, if I raise classic, seed stage startup, I'm going to raise $2 million on a post-money valuation of 10. So so it's what it's going to say is investors are going to own 20%. Founders, we're going to own 80%, but those investors are going to get a preference share, which means that they'll get the better of either their money back or 20%. And so, for example, if I raised 2 on 8, then if I sold it for 100 million a year later, then those investors would get 20 million. However, if I sold it a month later for 5 million, then those investors would get 2 million, right? They wouldn't get 20% they wouldn't get 1 million because they would be like,
they're guaranteed to get the money back.
Yeah. And their argument is, how is that fair? You sell it for 5 million, you get 4 million, right? And, I get 1 million. That's not fair. I at least get my money back, right? That's the argument. So like that, we had preference shares, and we actually had preference up until 559 million. And so for the first 559 million, our investors, they got all of that. They got, so if we were to sell for 559 million, they all get their money back. And the founders, employees, and early investors who invested in common wouldn't get anything. Everything above 559 million, then we as common shareholders would share in the upside. We would get a chunk of it. And so, if we sold for $1 billion, that extra 400 million we would share in. So here we have a company that is in early 2018 is going into this merger, is PASPA has just been repealed. So everyone is like immediately like, wow, this is a massive opportunity. DraftKings had just raised at 1.5 billion. Some public companies like the Score overnight went up 5x. And Flutter itself, our Petty Power Betfair, saw about several billion go onto its market cap, even though it didn't have much exposure into the US. So that's what's happening at the time. 2 years later, these investors sold that 40% for 4.2 billion. And so the question is, what is the value of that 40% when they did the deal? Well, the board, which was controlled by those investors who were conflicted, i.e., it was in their interest to make sure the founders and employees didn't get anything, set the valuation at exactly 559 million. So the number that would eliminate all of the common shareholders to make sure that they got all of the upside. And so that's what happened in 2018. We filed suit. We actually filed suit before the deal actually closed. And we're still, what is it now? 7 years later, we're still in litigation. And we're working our way through the New York court system.
Right. And where's the status today? Do you feel you're close to?
Yeah. So we had a very good ruling at the start of this year, or midway through, in the New York Court of Appeals. So the defendants in this case, KKR, Shamrock, some of the major investors, claimed that they did not owe a fiduciary duty to shareholders. So they're basically saying, we don't owe those guys anything. We don't have to act in their interest. So these board members that sit on the board, we don't owe a fiduciary duty to shareholders. We can act in our own interests. That went to the Court of Appeals, and the Court of Appeals ruled in our favor and said, no, as a board member, you have fiduciary duty. You have to act in the interests of the shareholders. You can't just line your own pockets. So they ruled that earlier this year, and now we're in the process. We're still probably a couple of years still ahead of us to go to court, but that's where we're at today.
Yeah. So we will follow that court case as we go along, of course, and interesting, and of course, after building the company for so many years and reaching that final destination of an exit, you would hope that the original shareholders and those involved would, of course, get remunerated for that hard work. And
the thing, just to be really clear, is it's really not just, this is not just about me. We have over 100 former employees in that suit. So when you look at this, what they did is they in effect defrauded employees who worked at this company, who put in the hours, who worked through the night, dealt with customers. These are people in customer service, in accounts, in operations, software developers. Sometimes were earning less than they would earn elsewhere, but they were getting equity in the company. And when they did this, they enriched themselves at the expense of people who were, basically going to work every day trying to make this be successful. And this wasn't a case that this company wasn't successful. This company was phenomenally successful. They knew it was phenomenally successful, which is why they did this. And so that's the thing that, certainly got me when this happened, was like, this isn't about me. This is about all of these employees that put in time and effort for these private equity guys to just screw them over. And so that's why we want to see it all the way through.
Yeah, it's a brutal reality. And, looking back, Nigel, what would you do differently when it comes to raising capital and bringing private equity people on board to your board? How would you have avoided this?
Yeah, no, it's a really good question. I get it a lot. And one of the things I say to people, I'm not anti-venture capital at all. As soon as I left FanDuel, I went and raised venture capital for my next startup. I just raised venture capital for BetHog, my current company. What happened to us is not normal, right? It's not. This is truly exceptional, truly exceptionally bad behavior. And what I kind of learned through the process is that, bringing investors in the board is a little like getting, it's like getting a tattoo on your cap table. You don't get them off, right? It's permanent. And the most important thing, and when people ask me, what's more important? Is it valuation? Is it terms? If I'm raising money, is it valuation, terms, or is it brand of the investor? And I was it's none of those. It's ethics. is that person that you're putting on the board, are they ethical, right? Are they people that you can trust and work with? Because you can't lawyer, like Warren Buffett has got a great phrase, and I love that, which is you can't do good deals with bad people. And I think it's a brilliant term, because you can't lawyer around everything, right? You can't like, they could do this or they could do that. If someone is on your cap table and they are intent on behaving badly and being destructive, then they will be. And there's no way to fix that. And often is high, and I've seen it numerous times, startups where they have a disruptive investor and it's highly destructive for everyone. And so that's the big one for me. So when I talk to founders and I'm like, and they're in a situation when they're raising and I'm advising them, I'm like, well, okay, who's the investor? And, there's certain things you look for. So for example, brand does matter, because, for example, if I'm raising from Andreessen Horowitz, it's a fund I really love. I'm like, I don't need to do diligence with them, right? Like, because I know they will behave ethically, and the vast majority are. But if somebody's got a really good brand name, then that's a really good sign. There's other funds then that you want to do, and then you need to do your due diligence to say, and the due diligence involves talking to somebody who's, they've invested in, who's gone through a difficult period, and say, how did they behave in that period? Because there's no point talking to somebody who said it all went great and they were really supportive, right? You want to go, okay, it went really badly and I needed their support. What did they do? And that's kind of the only kind of test that you can run by it.
Yeah. And I can imagine, during this time when this kind of funding war started between DraftKings and FanDuel, that the priorities was perhaps just to get the capital maybe.
Yeah, well, it was very challenging for us to raise money, and so and I didn't have that appreciation then that I do now. Like maybe I should have felt more money is money, but it's not. And then I learned that definitely learned that the hard way.
Yeah, brilliant. So we leave FanDuel behind us now, of course, and Nigel, you, of course, entrepreneur at heart, start a couple of new businesses, but we're going to fast forward a bit. Now you run the company BetHog, and once again, you have kind of gone full circle, and you find yourself once again in an emerging space within the industry now, as BetHog is launching as a crypto operator. What's the kind of thinking behind BetHog? Why did you choose to start a crypto casino at this point?
A lot of it, like crypto, just reminded me a lot of DFS back in 2009. If you think about it, it's a sector where people are like, oh, I don't know, it's a bit dodgy. There's like, unscrupulous actor, there's money laundering, there's crime, there's fraud going on there. So, and none of the mainstream operators take it, right? None of the regulators allow them to take it. So that had me kind of interested. And because when I looked at crypto, I'm like, okay, there is that stuff, definitely is used for money laundering. Definitely is, there's fraud. There's definitely crime there, but it's also a $4 trillion asset class, right? And there's a lot of, for all that stuff that's there, there's a lot of good stuff that's going on there. There's a lot of innovation. Some of the best entrepreneurs I know are in crypto and building, decentralized finance, building just incredible products. And so I was like, wow, this is as a founder, I do not want to be competing against people who have billions of dollars to dispose. Like, even I would say like FanDuel, by when I left FanDuel, 2018, 2019, 2020, I was regularly getting offers from people like we want to like set up a competitor. And I was like, it's too late. Like, they are now established. They have this brand. They've invested hundreds of millions to get here. And you're just turning up whenever it's obvious. And I looked at crypto and I said, this is one of these, the plays that I think it's, in 5 years' time, it's going to be obvious. It's going to be in 5 years' time, people were like, why weren't we doing crypto? Like, why doesn't FanDuel and DraftKings take crypto? Like, they absolutely should be. It's like this, it's a young, male, risk-seeking audience of like all this liquid assets. So to me, in 5 years' time, I think it'll be obvious. I think the other thing that I thought was interesting was I felt that in crypto casino, in casino, all the innovation was happening within crypto. So if we look at provably fair, right? just, brilliant. I can show you this game is fair, right? I can provably show you it's fair. Whereas before it was all trust. Number two was the whole kind of category of crash games. That didn't come out of like regulated onshore casinos. Again, it's a game through stake. Streaming, all crypto casinos, right? And streaming to me is this sort of social unlock. And so I'm like, wow, there's all the innovations happening here. And then I think the last thing for me was, I wouldn't put stake in this category, but, outside of the leaders like stake, I felt that a lot of the products just weren't that great. Like, so it went back to what we sort of felt with FanDuel was like, we could build a better product. Like, why is playing Sugar Rush exactly the same on 500 different platforms, right? Like it's pretty much, you put your money in, you play and you take it out, but there's no real difference in experience. We were like, well, we should be investing today in making the experience of playing that game on us, better than playing it anywhere else. And so that was kind of the other thing that just drove us is like, one thing that we kind of feel that we know is like, we know how to build a good product. And so we were like, this is, I tried all the products, or I haven't tried all 500 of them, but I've tried a lot of them. I try new casinos every week, and I'm like, wow, we just think we can build something better.
Right. And where are you in the journey today? So you have launched BetHog.
Started in January last year. We built a lot of our own titles. We've got 6 titles already. We've got another 2 launching in the next month. We've got, the list of like 500 third-party games that everyone else has. We launched in November. We've started to do a lot more in what I call is the meta game, which is why is it better to play Sugar Rush on us than play it anywhere else? So one thing that we launched just yesterday, it's our weekly lottery, which is basically every time you play with us, you get a lottery ticket. And at the end of the week, so a lot of our competitors do weekly races. The problem with weekly races is if you're a whale, then you win, right? If you're not, that's like whatever.
No point.
So we wanted something that rewarded you for play, and if you're a whale, you get rewarded, but didn't totally eliminate you if you're not a whale. And so what we did is instead of just giving it to the person who plays the most, we gave them the most tickets. But you could, even if you had only a small percentage of the tickets, you could still win. So we will have a draw. Our first draw is tomorrow. But again, that's the first example of a meta game, which is a game around the game. So you're playing Sugar Rush and us. It's exactly the same as playing Sugar Rush everywhere else, but you're getting your lottery tickets with us, and we're adding these other things that's going to make it more fun to play that game with us.
Yeah. And what is the ambition here, Nigel? I mean, do you want to create another industry leader here? Are we going to see BetHog as the next, recognized brand across America and the world?
I think that's on the brand level. I'd say the other thing that we sort of felt was, why has betting become so boring? Like, why are we, like even FanDuel, like we deliberately were boring. Like we were like, we want to be like, because we were felt legally, those question marks. We didn't want to go with sort of too aggressive branding. And the problem was, I just feel the branding of nearly all these platforms is just kind of boring, right? Like, it's like, it's a work, it's not fun, right? And we're like, it's like the betting industry forgot that it was an entertainment product. And so we were like, we're going to make this very clearly an entertainment product. We're going to make it fun. I like what Paddy Power back in the early 2000s they were probably the best brand that's done this. They said, look, we're unapologetically a betting product, an entertainment product. We're here about fun. And so that's what we want to do with BetHog. And so when we spent a lot of time thinking about the brand, we wanted a character, and that's the hog, that captured that brand. And that's kind of like, and that's sort of like, and now we want to let go all the way through our product. And so like we had a huge winner last night. And so we've just shared in our socials, and, there's like the hog had a rough night, because, that sort of idea. But again, it's like, this is an entertainment product. It should be fun. It shouldn't be the sort of, I just feel a lot of gambling sites, they take their design inspiration from banks. They're like, oh, it's, we needed a smooth process of execution. I'm like, it's not that. It should be entertaining. It should be fun. That, when you get an email from, your betting site, it should be funny, right? And if you're not even trying to do that, like, not doing right. So yeah, we want to build a big fun brand. With global aspirations. We want, at the moment, it's, we're focused on kind of pre-regulated markets, but we do want to come into regulated markets. UK is a market that I'd love to be in. We just think there's room for a new type of brand there. The big issue for us is that none of the regulated markets today will allow us to take crypto. And so that just would be a huge barrier. It's really core to what we do. But I think that will change. And we'd be very keen to work with regulators to show them and say, look, there's no reason not to allow us to take crypto. We would do the same KYC, AML, everything that, every other operator will do. But instead of us paying, 15% to payment processing companies, we're not paying that. And that means we can give a better deal to our customers.
Yeah, and I want to ask about that too, of course, that by nature, as a crypto operator, the pre-regulated markets is the place to operate in currently. How do you, and the backdrop still though is that, the Trump taking power in the US, becoming very crypto friendly. You have a lot of movement, of course, within the States now to become kind of crypto first to some extent. How do you think this all will play out regulatory wise? Because, another side of the coin is the backdrop of Eureka and kind of when the US hammer comes down, it comes down hard. So you kind of have these two diverting potential outcomes. How are you thinking about the future of the regulated space?
Well, it's weird. So while I live in the US, we don't operate in the US and we geo-block US customers. But at the same time, I'm always looking at how could we operate in the US. Gambling regulation in the US normally is at a state level. And so I think what would happen for us is that we would, once we get to scale internationally, we would then start to go out to regulators like New Jersey that are maybe more progressive and say, look, we would love to operate onshore. We actually think we have a very distinctive product from, the small number of products you have onshore, but we want to be able to take crypto. And so we would basically have to go state by state. Now, for our focus is casino. There's only 6 states in the US, or 6 or 7, that allow casino. So we would have to go to each one of those and say, hey, we would love to come in, but how can we work with you that we can take crypto?
Yeah. Well, if anyone can do it, it's you, Nigel.
Well, the other thing is the existing operators like FanDuel and DraftKings should be DraftKings spent $500 million in payment processing last year. FanDuel, I think said there was 12.5% of revenue goes to payments. It's, the numbers are outlandish. And for us, we can take, and internationally it's worse, we can take all of that money and we can just give it back to our customers. And that's essentially what we do. We do a lot of rake back. We just give it in bonusing back to our customers. So they're getting, instead of that money just getting eaten up by banks and Visa and MasterCard, that goes to users. They get a better experience. It's the only people who lose are the banks. And so it's crazy that the regulators don't allow this. So that's certainly our view.
Yeah, it's the Visa MasterCard tax, as they call it on the world.
It's funny. The users don't even see it. They're like, oh, well, it's only a small fee. Visa don't take that much. And I'm like, no, they when you're an operator and you see it, and not when you don't even add fraud and chargebacks on top, it's brutal.
Yeah, it's a brutal space. Well, Nigel, it's been an absolutely inspiring and exciting podcast. 1 hour and 10 minutes we did here today to get the story and the history of FanDuel and, of course, now what we have ahead of ourselves. Nigel, you're a fascinating character. You're an industry leader, a pioneer, and it's been an absolute pleasure to have you on the podcast here today. Thank you so much for your time.
Thank you.